Welcome back, folks. You're looking at a chart of gold on the 4-hourly time frame. We have now finally taken that liquidity that I've been mentioning in the last couple of videos. So we've taken out that liquidity. Okay, we've also closed below this swing low. Okay, and that does validate our target that I showed you how to calculate to this level here, and that's basically taking this low and this high, which is that manipulation for the pump, for the dump, projecting a range expansion of that range, giving us this particular target. Okay, so I think that is what's in play. Now, ICT teaches us that when we are looking for shorts, okay, then the best entries are going to be at the previous day low. So if I jump to a daily chart, okay, we've gone through all these daily lows, okay. We've tapped into this daily low, okay, we've taken liquidity there as well. And ICT says if you are still directionally biased to the downside and you want to continue shorts, meaning that you're expecting lower prices, then the best short setups are going to be from the previous day low. Okay, so that's why I have a line there, and I'm thinking that's where we kind of pump back up into for continuation shorts up until we reach our target. Now, we also have a fair, let me jump back to the 4-hourly chart. We also have a fair value gap there, okay, below that target. So I do think we will close that fair value gap. So I'm looking for around that 2455, okay, which basically closes that gap and gets us back into this 4-hourly order block, okay. Now on a daily chart, we've just come into a daily order block, and that's why we're seeing a bit of reaction, okay, from this level. If you remember a couple of videos ago when I did my analysis last weekend, I was saying that that's where we need to come back in and kind of balance this range. So we've now done that, okay, and we're kind of expecting now a pullback into previous day low for continuation. Now continuation maybe today, Friday, end of the week. I do expect us to close somewhere around that 2455 level, or it could be early next week, okay? Directionally, I'm still biased to the downside, okay? I've had a pretty typical week, okay? So my account size has grown again, up around that 80,000 level for my business, and I still have some trade done, so I'm looking to close them out later today, and I'll journal them. Pretty similar to what I did last week. Last week was around 90,000. That's pretty typical for my account size and the level of risk that I take. I'm not saying that those numbers are typical or even achievable by the masses. As I said before, it all comes down to individuals' account size and level of understanding of price action and tolerance of risk, and a whole range of things that I've mentioned in many of my videos, in particular being disciplined, okay, not falling into the traps that the market makers set out. For example, if we look at currently what's happening in the market, okay, folks who have longed the breakout on Tuesday, let's see if we can go back to Tuesday, we had a nice big pump up, okay, that's Tuesday, is that Tuesday? Yeah, that's Tuesday. Now, this is a breakout from the highs of Monday, okay, there's a lot of people who've longed that breakout and they are trapped. Okay, and now just imagine those folks, they're underwater, and they are underwater, 500 pips. So that would have blown out a lot of retail trader accounts. Okay, so the numbers that I achieve are not typical. Okay, it all comes down to an individual's account size, level of risk that individuals want to take. Okay, and their own trading style, understanding of price action, and experience in reading the charts. Okay, now I did take a couple of longs yesterday. In the final hour of New York after taking out the low of the week. Okay, so let me jump into an hourly chart. So let me just walk you through the thinking. So once we did get below these levels of liquidity that I was expecting the market to get beneath, okay, as per my videos, last couple of videos I've been mentioning those lows, okay, those equal lows on the 4-hourly chart, as well as getting below the low of the week. This is Monday, okay, so Monday is the start of the week. Once we are below that level, then I am typically looking for reversals, okay, and not just looking for reversals because we're down there, but watching price action, okay? Now, there's a couple of things that I've seen, okay? So number one, we're at the low of the week, okay? This is this move down. And all I'm trading is the pullback, okay? This is not a reversal in terms of we're going to make new highs. I'm just trading the pullback. I'm expecting a pullback. And that's typical. From my experience, I know that when you have large moves down, the market's going to pull back. But there's also a couple of other reasons that I consider when taking such an entry down here, okay, after taking the low of the week, after taking the liquidity that I have already marked out in advance within my own trading plan, and then looking at fair value gaps, okay, so this is multiple fair value gaps on this hourly chart, okay, I've mentioned when you have multiple fair value gaps, I just mark them out as one, because on a higher time frame, it is just one fair value gap, okay, now this is also taking a look at where's the market coming down into, okay, so on a 4-hourly chart, we are coming into bullish order blocks, okay? So to me, that's a PDA rate that's going to support price, and I'm watching price, okay? And I'm seeing on a lower time frame this rejection. Not only that, but on a daily chart, as I've shown you, we're also coming into a bullish order block. Again, I'm expecting that to be a support PDA rate on this particular chart. So after seeing that and taking it the low of the week, coming into a daily bullish order block, a 4-hourly bullish order block, I can expect a pullback at that level, but that doesn't mean I'm automatically going to long, okay? I still go to lower time frames, so I jump down to a 1-minute time frame, and this is where your understanding of price action really helps, okay? So I understand price action very well. I can read the tape very well, and that makes it easy for me because I've seen these patterns over and over again and again and again. Okay, and that's what you kind of need. So here I've seen a balanced price range. Okay, you can see the market's just basically coming down. As it's coming down to my points of interest, which I have already marked on the charts, I'm looking at time. Okay, I want to get. I'm watching this chop down, down, down. This is the chop. I understand this is the chop. Okay, as soon as I see this, I know that at some point we are getting closer to the end, and this is all happening at my point of interest. Okay, notice how the change of the candle formations in that zone. I've seen this. I know what this looks like. I know what I'm expecting. Okay, so as we come down into my point of interest, I'm watching the market. I see, we're in that 10 o'clock, right? This is all within that 10 o'clock and within that 30 minutes within that new hour. Okay, and I'm seeing that we're now changing, and it seems to me like a reversal that I have seen many, many times. Okay, so I see a balanced price range right there. Okay, we break structure. Okay, right here, right? All this down move. This is the first time we break structure and make a balanced price range, and so this is where I start to look at taking my long entry. Okay, that's the price point that I got in. I basically entered as this candle is moving down into this price point, into this fair value gap. Okay, and then this is the actual order with the slippage. Okay, so that's the entry, that's the low, reasonable distance. Okay, based on the volatility of the markets at that point in time, and it's just basically been going up since then. And I've held this overnight, so I'm just watching this, and I've got my level above at where I want to close this. So I'm actually going to close this at here. Okay, 2490 is the level that I am looking to close at. I actually put a marker there so that I can reference that later if I journal this trade. Okay, so right there, that's where my current take profit is on this trade, and that is in alignment with my expectation that the market's going to pull back up into previous day low, as I showed on the daily chart. You can see we're kind of crawling up there. Okay, and so that's currently my long trade, okay, from this level here. So it's already in profit, and I won't be taking it off until I get my level that I'm expecting this to go, and I'll journal that once I close it out. The reason I'm selecting this level is we have equal highs here. Okay, there's a fair value gap here as well, even though I do expect us to come up to the previous daily low. Okay, as I said, I'm not looking for the best exit. I just look for the easy exits, and that to me is the current draw on liquidity. Okay, now I want you to go back. I did journal a post this morning on Twitter. I want you to go back and I want you to study your charts. Okay, we've had our first down day. Again, I've spoken about this many times in lots of videos. Go and search for first down day on my YouTube channel. Okay, and that's what's provided us with a lot of opportunities for the pump and dump in every session. I might do a separate video on that, but every session we've had a setup for the pump and dump. In particular, one I want to walk you through, while I've got you here now, on a 15-minute chart on, was this Tuesday? Wednesday, we took out Tuesday's daily low, okay? And I did have positions on where I've taken longs from here, okay? I've journaled those, so go back and look at it. But there's Tuesday's low, okay? So after taking out Tuesday's low, that then becomes the pump, right, for the dump. And let me show you the same formula that I use to set targets, okay? So for example, here on that 4-hourly chart, okay, I showed you in a previous video, taking this range expansion up, projecting it down is giving us this target, which aligns with this fair value gap, and I do believe we will fill in that fair value gap. Okay, I'm looking for repricing lower to 2455, but we can do the same thing on these two up candles, which is a move that went down to take out Tuesday's lows. Okay, that is a pump for the dump. Okay, and if I do a range expansion of that, okay, that comes down below this current fair value gap that I've got on my 1-hour chart. Okay, so there's a bit of alignment. I like this one better, and I'll tell you why. The bottom one, which is projected from this pump up, I like that one better because that's the highest level on the chart, but also it aligns with a 4-hourly midpoint of a wick. Okay, so I've said many times that look for large wicks, right, on your 4-hourly charts, and that's this particular wick here, and it's those wicks that haven't been traded down into. Okay, so this I call a naked wick. Okay, it's basically a gap. ICT calls a wick just a gap, and so in my experience, these 4-hourly wicks need to be traded down into at least to the midpoint. It doesn't always occur, but from my experience, it's high probability. So what this really is a manipulation. Okay, this is the manipulation leg. Okay, and this is basically this is price moving down, right? So this is your sell, okay, to buy. So they've moved price lower to push price up, and nothing has come back down into that level to mitigate. Okay, these market maker sell orders where they've sold to push the market up are still open. They haven't come down to there, okay, to mitigate all that selling they did to form that manipulation leg. So if I grab a midpoint of that, let me just fix that up. Let's just put a midpoint of that. I believe the market needs to come back down there, okay, to that level. And that aligns perfectly. Look how well that aligns with the range projection that we've calculated from this move up. That's why I like that level more, okay? So I do expect that we will, at some point today or early next week, get back down to that level and my expectation is 2455, which is basically closing in this fair value gap and coming back into this 4 hourly bullish order block. Okay, so you've got to go back and you've got to study your charts, go back and look at on a 15-minute chart, look for the first down day, okay, where the market has closed below its open. Okay, that was on Wednesday, which is why we had a Thursday significant move down. Okay, 300-400 pips. Okay, and that's the kind of move you want to be in, right? That's a high probability setup, but you've got to be able to identify it in real time, and you can only do that by learning and studying the charts, going back and identifying these with back testing, as well as testing it live or monitoring the market live and identifying those setups in real time. Okay, so I hope the video is useful. I will now talk with you in a future video.